Good morning, everyone. Steve Gans here, and welcome to the weekend update on March 9th, 2025. Now, let's start by taking a look at SPY in this huge protracted uptrend that has been happening for a couple of years. Now, little twist on this. I mean, obviously, we can see this, we can see the falling out, etc. But let's look at the price point. It's 433. Let's look at our dates. This is back in 2020 up through 2022. Now, the reason I'm going back in time and I wanted you to see this is I now want to spin forward a little bit and I want you to see how similar these two are, okay? So this is back in 2020 up to January 2022. Then we dropped out of the channel. We came back down to prior resistance, chopped sideways for a year, and then we continued our uptrend. So we're now in this uptrend, and we have fallen out of that channel. Now, it looks like I might moved my channel here a little bit by mistake. Let me recenter this channel where it should be. And there's been a couple times that we've dropped out of this channel. So we dropped out of it a couple months ago, quickly rebounded, then we've stayed in the channel, then we dropped out of this channel again here just this last week. So what does all of that mean? Well, a couple of things. Last weekend, I said that we could easily drop down to this resistance area here, which we did. And then I said, if we break through that, we're likely to come down to this support and resistance area here, which we came down to and just touched. And I also mentioned this blue line, the 200-day moving average. It's pretty critical in most people's minds, the long-term people that study the market, the analysts, etc. This 200-day moving average is kind of a big deal, and it's important that this holds. Now, on Friday, we came down below the 200-day moving average, but then at the close, we rallied back, and we were almost right back at that 200-day moving average. What do I expect from here? Well, it's going to be an interesting week. I know I said that last week too, and this is when you drop out of a trend, things go a little weird. You don't quite know what to expect. It's kind of like you have a good friend that has a certain character about them, and you know you can count on them for certain things, or maybe not count on them for certain things, and all of a sudden they start acting a little bit differently. Well, that's what's going on here. And of course, this acting differently is fueled by things such as what's happening in the geopolitical environment out there, what's happening with tariffs, are they on, are they off, what's happening with inflation, is it up, is it down? All of these different things are what are fueling this, I'd call it to some extent, fear in the market, people bailing out of the market. So we've seen a lot of down days. We're also noticing that our down days, the volume tends to be a little bit higher on down days right now. That tends to cast a little bit of a bearish tone to the markets. So again, that leads us to be a little more to the bearish side. What is prompting me maybe to consider that we're not fully bearish is, let's take a look here. Let's do a little measurement. And I want to measure where we are from the top of the market here back a few weeks ago down to its lowest point, and that drop was almost 8%. We can see that, let's see, let me get right on that. We can see it's 7.87%, and that happened over 12 days or 12 bars. 16 total days, but 12 market days. That's a pretty rapid drop. It also is almost hitting 10%, which is what is considered a normal and typical correction in a market. When a market pulls back around 10% or so, that's considered correction territory. It's also considered what they call backing and filling. Basically, the market pulls back so we can see, who is going to get shaken out of their positions. Who are the shorter term traders that just say, you know what, I'm done. I've had a lot of profits in this market from here to here. I don't know what's going to happen now. I'm out. And that's where a lot of the selling comes in. And then you have what many people refer to as diamond hands. These are people that want to hold positions much, much longer term, and they're looking to buy shares from the quote unquote traders. When those traders get shaken out of the market, those diamond hands, the people that are looking for long-term positions, start to come in and will buy these positions. So we've got to see if that's going to be happening here or not. I guess I would say neutral at this point, because this is holding. That's a good sign, but it has been a pretty fast and furious drop with increasing volume. Now let's take a look at volatility, see what's happening with volatility. So volatility on Friday did spike up here to a new recent high. It still hasn't exceeded here, that 28 mark. If we exceed this 28 mark, obviously it will be in a further protracted down move. So right now there's a moderate amount of fear in the market. Let me just extend this out. So we're certainly above that prior resistance line, but again, we did retreat on Friday. The VIX did, so that's a good sign as the market rallied later in the day. Let's look at the Qs. So the Qs have dropped right down to the bottom of that channel, poked out of it right into a support area. So again, going to have to see how this holds throughout the week this week. The Qs did fall out one other time pretty firmly and quickly rallied back. So we need to see if that's going to happen here again. And this is going to be a pretty telling week. And we can look at the volatility on the Qs, and it also hasn't quite hit new highs here. Then we look at IWM. IWM has definitely fallen out of its channel. It's been in a channel for quite a long time. It fell out firmly, but it is right down here now at what might be considered a little bit of a support or resistance level. And we have a lower one here yet that's probably a little more pronounced. I mean, hopefully we're not going to drop down to that. But let me just see if I can extend that over here. But that is certainly a possibility. But I think more likely, if those other two hold, this one's going to kind of hold in that same area. We look at volatility, same story with volatility. Definitely elevated, but haven't broken above those prior volatility highs. So bottom line is we're neutral maybe at this stage, a little bit to the bearish side. If we zoom in on some of this, we can see that we've made certainly lower lows along the way. When we've tried to rally up here, we haven't been able to exceed those prior highs. So we are in a current downtrend where we're making lower lows and lower highs. So we need to see if that can get broken. Maybe we rally up here, we get back above this green bar right here. That would be pretty key if we could get back above that 580, 586 range or so and close above that. That could signal now a higher high of recent days. And then if we get a lower low off of that, we can maybe crawl back into this channel. Now, if we can crawl back into that channel, again, the key will be to see how far we could get up into that channel. That's really what we're going to be looking to have happen. So that's the weekend update. If you like this, please click the like, subscribe button below. Give me any comments, give me a thumbs up.